All right, we are live. Hello, everyone, and welcome to Stock Market After Hours. My name is Mark Roos, and it is great to be back with you guys. We are here another week, more turbulence, more talk of tariffs. What do we do from here as investors? Is it just a buy the dip kind of a market that we're in right now? I don't think that's the answer. I never just think that we just blindly buy the dip. But let me know if you have been buying anything of late. Maybe today was a day that you added to some positions. Let me know in the comment section, and let me know where you are tuning in from. Again, it's always great to be with you guys. I am here in Southern California on a nice spring day. The sun kind of coming in and out here right now. So, but no complaints overall here in Southern California. So let me know in the comment section. Again, if this is your first time joining, my name is Mark Roos, and I'm a CPA here in the state of California. And these are geared, these Stock Market After Hours, this live show is geared to be interactive. So if you have questions, I try to get to as many questions as I can. I'm going to give you a high level rundown of what I'm seeing in the markets, kind of a recap of what's been going on in the markets as well. And our shows usually kind of just touch on those things right there. So let me jump over to the comment section. We got Marco in the house, tuning in from Marco Island, Florida. MVP, you coined the phrase nibble at stocks. My friend, I'm chomping. Eli Lilly, Realty Income, Vici, Berkshire, Walmart, Waste Management, McDonald's, Google, Taiwan Semi. Marco is off to on a buying spree. Wow, they've really changed these the comment section here. The comment section is huge on StreamYard. Hey Mark, hope you're well. What do you think of international exposure? I'm heavily weighted to VU, SCHD, QQQM. So right now, I think it's definitely something to take a look at. There's a number of different ways to do it. Usually when I'm looking for international exposure, it's just going to be simple ETFs. So you could look at emerging markets ETFs if you're looking for something like an EEM, or you can go more specific to countries or regions. So if you are looking for some China exposure, particularly technology, you could look at something like the K-Web, which has been outperforming US technology companies here, or you could look at something that I like, which is India. I believe the Indian market is going to be fantastic moving forward. Looking out, long term, one of the ETFs I like, although I'm not a huge fan of the expense ratio, as you know, but INDA is definitely one to take a peek at. I have no ownership at the moment right now, but something I'm looking at a little more closely given where the markets are right now. So good question there, Jordan. Haywood's buying. Love it. I added to all my positions this week. Nice. All right. What do we got? Bought some ELF. Matthew, good to see you. Good day. Buying as much SCHD as my paycheck will allow. Dr. Denise, thank you, Mark, for all your information. Tuning in from Manhattan Beach. All right. Not too far away right here. Nibbled at some Vici properties. Long got into some Marvell today at a cheap price. Little value. Carl, I like that play right there. It's on the safer side of things right there. Value's definitely been a solid spot to be in if there is one right now. We'll add every week, no matter if we're up, down, or sideways. Atlanta is in the house. Dan, Oyster Bay, SPGI, and a little Microsoft. John, good to see you, my friend. Little Salesforce, JetQ, Berkshire, and SCHD. Nice little combination you got there. John, I like it. New York City, more Western New York. So New York is taking over right now. Wisconsin, good to see you, Way. Picked up some GPIX and a little SCHD. So SCHD's been a common theme here. Is that Madeira Beach? Is that how you say that? Florida, Berkshire. Can't go wrong with Berkshire. Rhonda, good to see you. Definitely buying the dip. Seems like I've been saying that for 2 months. It has been some wild, turbulent times. That's for sure. Greetings from Southern Indiana. Added to some triple QMs and a little SCHD so far. So SCHD continues to be a very common theme. Here's some more SCHD by Bill. Sergio from Portugal. Great to have you. Where are the markets headed in 2025? I got something you may be interested in there, my friend. I only regret that I have but one life to buy more Amazon stock. Amazon is definitely looking very intriguing at current levels right here. So let's take a look at the slides. So we got slides up and running for you guys today. If this is your first time joining, we just like to put together some high-level slides. If you're a returner to Stock Market After Hours, this is probably nothing new to you. So we always like to start with our economic update, kind of give you a snapshot on where are the markets so far right now. So the Dow Jones is down roughly 7%. These are year-to-date figures. S&P 500 down a little more than 10%. NASDAQ, though, has been the worst of the major three. They're down roughly 15.5%. Small caps, not doing. Tariffs, interest rates, inflation, all of this does not bode well for small cap companies. Hence why, if you are an Edge Plus subscriber to our Stock Investors Edge newsletter, then you know that I've cut my bait in terms of small cap exposure there. Still have very little, but got rid of a lot of that there. Oil sitting around $63 per barrel, so really hovering around that $60 range, between 60, mid-60 range is kind of where it's been sitting at. And Bitcoin is something that really hasn't gone anywhere. Just been hovering in this, every week goes by when I update these slides, and it seems like I go from 82 to 86. Last week was 83. This week, when I updated the slides, we're at 84.5. So again, it hasn't had much movement, which is maybe a good thing considering how volatile the markets have been. Maybe who would have thought that Bitcoin would have brought some stability to your markets to your portfolio over the past few weeks here. So looking at valuation in terms of the S&P 500 as a whole, right now we're sitting at a PE multiple of 19.5 times. Again, that is still using the current estimate of $270 per share for the great index right now. Again, the 10-year average is around 18 times. So still looking elevated at current levels right now. But the thing that you got to ask yourselves is this company going to be is these major companies going to put together collectively that 270 figure, which was really the figure heading into 2025. Obviously, tariffs have gone a lot further and lasted a lot longer. Many thought that, hey, maybe this is just a negotiation ploy. These really seem a lot more permanent if you think about what's next on the administration's list of to-do. And it's going to be extending those tax cuts and making some changes to those. So really, the tariffs is a way for them to raise money in order to do that, which makes me believe that no, these aren't as much negotiations. There will be negotiations, but I believe these are a little bit longer than a lot of us had anticipated there. In terms of interest rate, we got the 10-year and the 2-year. Not much movement on the 10-year since our last time updating this. Last time was 4.25. We're sitting at around 4.3 right now. However, the 2-year has seen some movement. We've seen 20 basis points movement roughly from around 4% down to roughly 3.8. So again, with a lot of this inflation, a lot of uncertainty that we've seen in the market, we were, expecting a lot of folks moving to bonds. But in fact, we did see a big drop in the rates initially, but then there's been a lot of selling in bonds, and we think this is, or at least I should say, I think this is China playing, some games with the U.S. right now by, expecting those and the administration hoping for interest rates to come down. So if we sell bonds, though, the interest rate has an inverse relationship. So if the price of bonds comes down, that actually forces rates to go up. So that's a way that China can kind of play a few games with the U.S. right there. So definitely something to watch. And remember, the bond market is much larger than the equity market. It is something that you definitely want to pay attention to and not just, number one, not understand, but just ignore completely. Definitely pay attention to the bond market, folks, because that is by far the largest. Here's a look at our fear and greed index, something we take a look at each and every week. It was as low as 4 that we've had on this session or this live show. We're up to 14, but we are still firmly in the red in terms of extreme fear. Now, you may go with the Buffett saying that be greedy when others are fearful. Well, folks are definitely fearful right now, but that doesn't mean we just go in and blindly buy. Even the Oracle of Omaha, Warren Buffett, isn't doing too much buying right now. So we'll get an update from Berkshire here soon, but right now there's some concern in the market. And had you been a dip buyer when all of this started, you would have bought the dip. It's kind of like Rhonda said, I feel like I've been buying the dip for 2 weeks here. And then it dipped more, and then it dipped more, and then it dipped more. We were at these levels where valuations were just so out of touch with reality. I always like to say, and come back to it, valuations always matter. There may be periods of time where stocks are just over their skis and you're going to keep making money, and that's fantastic. but you got to be responsible if you're managing your own portfolio and know when to take some profits. It's okay if you miss, 5 or 10 percentage points higher there, because you got to stick to your strategy. From that perspective there, you know your risk profile, you know how long until retirement comes. And some of those years may have been extended. Let's say you were, within 3 to 5 years of retirement and the stock market just fell 10 to 15%. That can prolong things a little bit more. So as we get closer to retirement, we got to make sure that we're not over our skis in terms of risk, that we tighten up the hatchet a little bit more as we get closer to retirement there. But if you still have a, 10 plus, 15 plus year time horizon, there's still some time to turn things around there overall. And no reason to be concerned from that standpoint. All right, so let's take a look at, let me share my screen with you guys here so that we can jump into some sector performance. So let's take a peek here at sector performance. We'll begin with our year-to-date figures, as we always do. So right now at the top, we have consumer staples in the green by roughly 5%, and utilities, the only two sectors of the 11 in the S&P 500 that are actually green right now. Everything else is red. Healthcare is wanting to turn green. But look at what the sectors that we have. And this is what you have to pay attention to as an investor, especially as we look at the 3-month and especially as we look at the 1 month. Where have investors been moving their money? To more risk on assets or to more defensive sectors? And when you see whether it's the 1 month or the 3-month or the year to date, it's pretty much not changing all that much at the top. If we look at 3 months, we're going to see consumer staples, utilities, real estate, and healthcare. If you look at those are all some of the most defensive sectors that are out there. And when you think of defensive, you have to think of, where do consumers have to spend money at? You can tighten up the wallet. If we hear about job layoffs, we're probably not rushing out to buy new cars. If we're hearing about job layoffs at our job, there's probably not, the new $200 pair of shoes or a $500 shopping spree for a new wardrobe. Those are probably going to take a back seat, and we're going to save on our budgets from that perspective. But we need to spend on food, consumer staples. We have to spend on our health. If our health goes south, we don't ask ourselves, well, what's going on in the economy? No, you probably need to go see a doctor if you're really sick there. So healthcare is going to be, we need to have the lights on with utilities and energy and things like that. Those are defensive sectors. Look at the very bottom though, the opposite. Consumer discretionary. That's what I was just talking about with those shoes and those clothing and cars and things like that. And you look at information technology, communication services continue to lag, a movement out of the Mag 7 and into more defensive value stocks. For a couple of years here, it was always folks saying, man, well, if NVIDIA is up 300%, why would you ever invest in dividend stocks? Why would you ever want to waste your time with SCHD when you're just getting this much in yield? Now, these are folks that it was their first time investing. They were all excited. Folks, during the pandemic times of 23 and 24, you could throw a dart at the wall, and whatever stock it landed on, you could buy that stock, and you were probably green during those years. But those were Goldilocks times. Now we're getting into to see what folks are made of in terms of investors. Okay. So this is when, do we panic and just sell everything? Or do we buckle down and learn how to build a watch list the right way, understand what your strategy is, understand your risk profile, what stocks, what's your end goal? These are all things we talk about within my 6-week investing accelerator program. Okay, you have to have your own strategy, okay? So that's the important thing to understand, is how do you value stocks? How do you analyze stocks? Build that watch list so that you know when to buy particular stocks there. So that's a look at where we're at as it pertains to sector performance right now. It's very heavy defensive. Okay. And that in a near term is telling us that we need to be concerned about what's going on in the market as a whole. And that leads me to my big event tomorrow. So we're having an emergency market update. This is a completely free event to join. We'll be going through how to invest in volatile markets. We'll take a look back at the past few volatile markets that we have. 2022 was the latest volatile markets, but we're going to dive back into some stats around recessions. When was the last major recessions that we saw that wasn't a pandemic related recession? Let's go back to the great financial crisis. Which stocks, which sectors outperformed and which ones didn't perform all that well? How long were we in these drawdowns? And we'll look at multiple periods there. And I'll go through, what do I believe in terms of a recession? Are we headed towards one, or can we, divert away from one? What are some stocks I'm interested in buying right now and on the horizon? So we'll go through some watch list stocks there, and then some concerns that I have in terms of near-term valuation. So we'll go through a little bit of that as well. It's completely free to join. There should be a link down in the description below. Just click on that link, throw your email. You'll get a link to the event tomorrow. Again, you have to be signed up with it. It's not going to be something that's going to be hosted on YouTube right here. It will be a private event, but it's completely free to join. So hope to see you guys there tomorrow. That'll be at 8 p.m. Eastern time, 5 p.m. for those of you on my time zone in the Pacific there. So let's take a look at the Fed. What is the Fed? And a lot of what happened today in the market, I believe, was Fed induced. There was no major news that had come out that was related to anything that should make the markets fall. So right now, the next Fed meeting is going to be on May 7th. So puts us at about 3 weeks from today, we'll call it. Right now, we believe around at 83%, looking at the futures market, 83% that rates aren't really going to go anywhere from during that meeting. And 17% still believe that we might get a 25 basis point cut. So that'll be interesting to see. We could take a look at the probabilities here. How many rate cuts are we expecting? So it looks like the first is going to be expected around June. We'll get another in July, a third in October, and a fourth with only a 34% chance potentially in December. So right now, the Fed futures here are still pricing in 4 rate cuts from the Federal Reserve coming here in 2025. So in the comment section, let me know. Are you taking the more? You think there'll be 5 or more cuts in 2025? Or are you going to take the under and you think there'll be less than those rate cuts there? Let me know in the comment section. I'll jump over, excuse me, into the comment section, see if I can browse through some of these and pick out some questions that you guys might have here. Ron is buying a little VTI, tuning in from Mesa, Arizona. Mark is my fave, Supreme Edge Plus. I appreciate that. Is it okay to keep a REIT ETF in the Roth IRA? So dividends, I like to pour dividends into my Roth IRA. But to answer your question specifically, Ed, when it comes to REITs, because I've tracked and followed and analyzed REITs for well over a decade now, I'm well versed on what REITs are good. What price points do I want to invest in specific REITs in different subsectors of that REIT category as well? Because the reason being, I'm a huge fan of ETFs in general, but when it comes to REITs, because of how closely I track them and follow them, and because of I know how many poorly managed and run REITs there are, I don't want a portfolio of 200, 300 REITs. I would rather build my own portfolio by investing in individual stocks, a handful, a dozen high quality REITs. Because if you look at it and you go to, say, the top 4 or 5 different REIT ETFs that are out there, look at the top holdings. You will find the same exact top holdings time after time, which tells you these are the highest quality REITs. So if you're interested in them, why not just build a portfolio of those? Not to say that the REIT ETFs are bad, because again, I have followed this particular sector very closely. I've written a book on this and written about them on Seeking Alpha for a number of years. So it's not to say that the REIT ETFs are bad by any ways, but asking me the question specifically, that would be my answer there. Curtis bought a CSP, a little cash secured put on Lam Research here. The last Choi wanted a little PLD. I love me some PLD. Which S&P 500 ETF is best here? So question from Reagan. So it depends. They're all they all track the S&P 500, whether you're looking at VOO, whether you're looking at FXAIX, IVV, whether you're looking at SPY. However, if I asked you the question differently and I said, in addition, are you interested in doing stock options? Because if the answer is yes, and that's what I do, I generally do stock option trades on a weekly basis, I would rather invest in SPY because that is the most transacted ETF in terms of options. VOO, not a lot in terms of the options market for volume. Long term, though, if you're saying, hey, I'm probably not going to do options, or maybe I'm just at least not going to do it with the S&P 500, VOO is a fantastic route to go. Not why pay the higher expense ratio for something like SPY. So hopefully that helps answer your question overall. And Dr. Denise Hit it right, hit the nail on the head right there. Curtis, I mean, I sold a cash secured put, hoping to buy it if it drops below 55. I love utilizing options there. Mark did a fantastic 4 ETF video and mentioned VU. There we go. Nice. Thanks for the shout out to that video there. All right. Cybersecurity from a certain angle can be considered as defensive. It's not really impacted by tariffs. And this is something Osmara Fishing brings up a fantastic point here, and this is something that I covered in a recent video. Is this is a sector, or if you want to call it a subsector of technology, where businesses can't really pull back on. If you think about advertising, sure, plenty of businesses can pull back on advertising. If we go into a recession, the likes of Meta and Alphabet and Trade Desk, they'll probably feel the brunt of that because ad dollars is a big piece of the business. Heck, Amazon is growing their ad business in a big way. Again, it's not the largest by any means there, but they'll feel that there. Cybersecurity isn't really something that you can pull back on, which is why I believe in, and I'm upbeat on things like CrowdStrike and Zscaler and stuff like that from a cybersecurity standpoint. So great point there. Adobe is something I have completely erased from my portfolio. They are ones that, I like to give companies the benefit of the doubt. And when it comes to Adobe, it was really split down the middle. They could utilize AI and it could really take their revenues to the next level. They'll be beneficial to the company. And then there's the crowd saying, no, AI is going to make Adobe irrelevant in many aspects. And again, I don't believe that Adobe is just going to become irrelevant just because of AI. But what I have seen, or what I have not seen from Adobe, in how they're able to utilize AI to generate more in terms of revenue, to put it lightly, has been pathetic. And it's been a couple quarters now where it really hasn't transpired into anything, and the game plan doesn't really sound clear to me as an investor. And at that point in time, I have to look at my investment, and looking back, hindsight's 2020, looking back, the sell has been a fantastic move for myself and my portfolio. But still, I'm looking at that money saying, hey, let's just use, for example, saying, hey, this is a $5,000 investment. Is this $5,000, whether I'm at a gain or a loss position, could this $5,000 be better used elsewhere? Are there better opportunities, positions I'm actually excited about, where I see a clear growth path, where I'm looking at valuations saying, hey, I've done my due diligence here. The current levels look fantastic here. Could that money be used better elsewhere? And that's what I have to ask myself, because again, I definitely don't have a money tree growing out in the back where it's just unlimited of funds to invest in new stocks. So as a portfolio manager, my own personal portfolio manager, I have to make these decisions. I don't like to do short-term trades by any means, and Adobe's been in my portfolio for quite some time, but I decided to cut bait when it comes to Adobe there. VTI, that's a total market one, so that's not going to be the S&P 500. I've never been a huge fan of VTI. I believe diversification is key to making money in the stock market, but I also believe that there's such thing as over diversification, and this is something that Warren Buffett and others have talked about from that standpoint there. All right, John's going less on 5 rate cuts, less for Marcus as well. Good to see you, TCC. We going more or less? What about NVIDIA? So let's keep going. I'll touch on NVIDIA. We got a slide focused on that right here. So let's take a look at some more slides here, because I'll jump to, talking about NVIDIA, talking about AMD and things like that. So tariffs continue to rule the market. Tariffs, how does it impact inflation? How does it impact the Fed? We kind of go in this, circling order of things. So tariff talk continues to sway the markets. Tariffs on, tariffs off. Market goes up, market goes down. 245% tariffs on some Chinese products. Not all. 245 is not the number for everyone. That's been some folks have been thinking everything is 245. That's not the case. Things like electric vehicles, things like syringes. Thought that was weird that those are two completely different things, but those are two of the products that are on the 245 list there. White House also says that, hey, China wants to negotiate, but they keep retaliating at one another, where it doesn't look like a compromise is coming anytime soon. It seems like, hey, we're now actually in the middle of a trade war. Some folks are talking about, hey, there's concerns about a trade war. This is the definition of a trade war. One retaliates, the other retaliates. The other retaliates back, the other retaliates back. That is, I mean, that's the pure definition of a trade war. But it seems like, as bad as that is, because these are the two, global powers here, that the others are kind of taking a back seat. We have that 90-day pause here. And I know the markets went parabolic, having, the NASDAQ having its second best day in history. They weren't abolished tariffs here. Okay. So let's not overreact here. They were paused for 90 days. So it just leads to the uncertainty that continues. And if there's one thing that I continue to talk about in my most recent videos, is the fact that investors hate uncertainty. Investors love to know what the current policy is, because that'll help them understand a little bit which companies are going to benefit, which companies are not going to benefit in certain policies. And everyone's, whether you're Republican, Democrat, whatever side of the aisle that you're on, top, bottom, left, right, whatever the case may be here, different policies are going to impact different companies in different ways here. So, but if we have clarity, that helps us. Regardless if we agree with the political views there, we have clarity. Right now, there is no clarity. Having a 90-day pause does not give us clarity. Seeing reciprocal tariffs back and forth does not give us clarity there. So that's where some concern about the stock market in the back of my mind believes that there's plenty lower. I know that we saw the 90-day pause. Plenty of folks came on CNBC and said, "Oh, this is the bottom. We have now bottomed in the markets." Well, I mean, we gave all that up rather quickly there. Not for 1 millisecond did I believe that was the bottom of the stock market. And I continue to believe that we could, in fact, go lower. And I'll talk more in depth about that in tomorrow's emergency market update, that hopefully you guys will all be able to join live. We'll be taking questions there as well. You can sign up. Again, it's a free event to join tomorrow, folks. Get signed up for that tomorrow. So what else did we have? Well, the White House also did a recent chip ban, particularly hitting quite hard the likes of NVIDIA and AMD. So the H20 NVIDIA chip and the AMD MI308, they are completely banned from China. And the White House on top of that says, we're not only banning those, we're also looking into NVIDIA to see if they knowingly sold chips to China in relation to the DeepSeek news. Because remember, DeepSeek came out showing that you didn't need the most powerful chips there. We can build this this language model without using those. And we found that they were the H20 chips there. So they're looking into whether NVIDIA knowingly had any idea about that there. But like, going back real quick, NVIDIA and AMD came out and said, okay, this chip ban that is now enacted here, that's going to have a $5.5 billion revenue hit to NVIDIA moving forward. AMD, not as bad, but still $800 million revenue hit moving forward here. So other things in the news right now, earnings season is fully underway. So on top of uncertainty, on top of fear in the markets, on top of inflation, on top of what is the Fed going to do, the back and forth with China and the US, let's just pile on and start our earnings season, which officially got kicked off on Friday with some major financial institutions. We had more financial institutions joining the party early in the week, and we have more large companies that'll be coming due this week as well. So a lot going on right now. Expect volatility to remain. If we have less than a 1% day, that just seems like a boring day right now. We're used to these 3-4% moves now. And although they can be scary, you can also make a lot of money, because volatility brings high premium prices. High premium prices puts money in our pocket for us option sellers. Again, the risk is higher, so we got to understand that and make sure we're doing it, but we need to be a little bit more conservative. We can go out 20, 25, 30% on some of these strike prices and still be earning a couple $100 per contract on a lot of these stocks here. I mean, we're talking about selling cash secured puts on a stock like Amazon with a price point around 150. I mean, who wouldn't love to buy Amazon at 150? I know I would. And that would probably be a back the truck up moment for me. But you could be earning some pretty good premiums by selling things like that. Some other news that we got retail sales numbers that just came out for the month of March. They rose 1.4% there, matching analyst expectations. And those were actually the best retail sales monthly figures that we've seen in more than 2 years since January 2023. The biggest driver, though, happened to be auto sales, which saw a 5.3% increase during that particular month there. And this one kind of makes sense, because if you think about all of the tariffs that are going into effect, especially those if you're looking at European vehicles, Those are getting hit with a tariff, which means prices are likely to be impacted. So folks are running to make some purchases right now before that price hikes push through. And again, this retail sales figure that we got here, this is likely going to be the last one until we start seeing the impact that these tariffs are going to actually have on costs. Inflation's going to potentially increase from here, or stagflation we're going to have. The Feds is going to really struggle with these tariffs and dealing with where inflation is right now, because it's nowhere near its 2% goal. And I heard them say this week, which gave me even more concern, is this is transitory. We've heard the Fed say transitory before, and they've never been more wrong in recent history here. So let's hope they're not behind the 8 ball there again. And this is again a reminder, if you are just joining us, that we have our emergency market update going on tomorrow. How to invest in volatile markets like we're in right now. We'll talk about some facts around recessions. How do we invest in a recession? What are some stocks that I'm interested, ETFs that I'm interested in buying, and concerns that I have around near-term valuation. We'll be touching on a number of different things there. Again, it's a free event to join. There's no costs in these. We definitely do paid costs where we go into valuation workshops and REIT workshops and option workshops. This is one of the free ones that we do on a one-off basis or a quarterly basis, things like that. So hopefully you guys can join us for our emergency market update. There's a link down in the description below if you are interested in joining that. I hope to see you guys all there tomorrow. Let me see if there's any few questions here before we wrap things up. And again, if you're interested in joining any of our newsletter, we have 2 great subscriptions. Our Edge Plus is going to give you access to my entire portfolio. You'll get trade alerts on stocks, ETFs that I'm buying, selling. You'll get stock deep dives, as well as keeping up in depth with all of the earnings that's going on and all of the stocks that we follow there, as well as our monthly Edge report, which kind of gives you a look back, but more importantly, a look forward, what to watch out for in the week ahead. That comes out each and every week. And then we also have our Options Edge Plus subscription. That is all going to be figured and focused on options. So we have a weekly options report that comes out. Plus, you'll see all of the trade alerts for any of our option trades that go on in there. So hope to see you guys join our community, our growing Discord. It is a fantastic group there. So the last Choi, I wish you could join tomorrow. I picked up some ET today. There you go. Someone watched the recent video. What do you see gold going up to? Gold has been on fire, and that should give you some more concern about where we're at in terms of the market right now. Hoagie, good to see you, my friend. Jep Q and a little SCHD has been buying there. Like to see it. Scott buying Amazon. We can't buy enough Amazon, especially if it dips into those 160s. I mean, I'm going back in there for, I would say, a second time, but it's more like a third or fourth time there. That stock at a valuation right now, it may not be the bottom right here, but the only thing that you can control as an investor is that you're buying a high quality company at a great price. So if it takes off from here, you're going to say, man, I wish I bought more. Well, stick to your strategy, especially if you have that 10 plus time horizon. If it goes down another 5 or 10%, that is something that you're never going to remember. It's going to be a small little blimp in the radar from that perspective. Now, if it goes down 50%, not something that I believe is highly likely, okay, that'll be a different story. That'll take some years to kind of work its way out of there. But again, not something that's all that likely. At least I don't believe it's all that likely there. Some more SCHD, dollar cost average, best way to go there overall. Love me some SCHD. Brings some great balance, especially to those S&P 500 heavy portfolios, especially to those tech heavy portfolios there as well. What's your price target on the S&P 500? We will be talking about that tomorrow in our emergency market update. Why do you prefer SPY over VU? VU has a much lower expense ratio. Esther, great question. So what I was alluding to earlier was the fact that I trade options on a regular basis. And when it comes to SPY, although I'm paying a higher expense ratio, you're 100% correct there. It is the most traded ETF in terms of options. SPY, IWM, QQQ. It's the same reason I prefer the triple Qs over QQQM. Now, if you're saying, hey, Mark, I'm not really interested in doing options, or I'm not interested in doing options on those, then yes, go buy QQQM. Go buy VOO instead of those others that have higher expense ratios there. So hopefully that helps answer your question there overall. So thank you guys for being with me today. Again, I hope to see you guys at our emergency market update tomorrow. Again, that'll be Thursday, April 17th at 8 p.m. Eastern Time. The link is down below to join for that live. Again, it won't be streaming here on YouTube. It will be a private event, which you'll get a link to. It will be a private YouTube link, I should say, but not open to the public. But it's free to join. Throw your email in there. You'll get the information, and we'll see you tomorrow. Thanks for being with me, guys. Hope you have a good rest of your day. See you tomorrow. Take care.